Hey guys, this is Thanos and welcome back to Practical Wealth. So last week I made a video about investing in real estate and I got so many questions from all three of my friends asking me about credit scores and how is it possible to improve your credit score or what to do if you have a low score, and I thought instead of answering all those questions one by one to make a video about it. And this is it. Okay, first let's see what a credit score is. Well, a credit score is a number that represents how good of a borrower you are. Like the number of your Instagram followers, the lower the number, the less chance you have to be accepted by the cool guys. And by that I mean banks and lenders. When a lot of banks and institutions are trying to give money out to people, they will look at their credit score, so they will run your credit just to make sure how good you are at paying back money that you borrow. In the US, you have the FICO score, which is the most used one, and it can be anywhere between 300 and 850 points. According to Equifax, which is a credit reporting agency, this is how your credit score is judged based on your points. So between 800 and 850 you have excellent credit. Between 740 and 799 you have very good credit. Now between 670 and 739 you have good credit. Between 580 and 669 you have fair credit. And anything below 579, well,
that's it, man. Game over, man. It's game over.
although the FICO numbers that I mentioned display a general idea of how lenders may interpret different credit score ranges, lenders and other companies can and often do differ in their opinions of credit worthiness. Just like my wife and I understand differently what clean means for our house. For example, just because you're considered to have a good credit score to an auto dealer doesn't mean a mortgage lender would consider that same score to be good credit risk. Each lender has their own criteria for credit scoring, as well as their own thresholds for a good score versus a bad score, or what score could give you the best rates. So if you're aiming to qualify for a mortgage lender's lowest rates, that generally falls under a FICO score of 760 or higher. However, a credit score of 720 or higher will likely qualify you for an auto lender's best financing offers. But in order to see what an impact has in your pocket a change in your score, let's see an example here. Say you have a FICO credit score around 640 when you apply for a $350,000 mortgage. FICO's loan savings calculator estimated that in June 2021 your APR would be around 3.669% on a 30-year fixed rate loan. Your monthly payment would be $1,650 and you'd pay around $227,000 in interest over the life of your loan. Now imagine you work to improve your FICO score to 760. With a higher score, you might qualify for an APR of 2.626%. Based on the lower rate, your monthly payment would be $1,406 for the same home. You would pay around $156,000 in interest over your 30-year long term. Because you improved your credit score from fair to very good, you would save $246 per month, $2,952 per year, and $71,604 over the life of your loan. So how is it possible to achieve the perfect score? Well, it depends, because if you're talking about a perfect score in Cuphead, it can't be done. Sorry. For a perfect credit score though, the easiest way to do this is to break down which factors actually affect your score and what we can do to fulfill each factor's requirements. So for 10% of this pie you have new credit, and this actually refers to the amount of credit that you open in a short period of time. Every time you open new credit, you will have your score getting impacted temporarily with a hard or soft pull. This doesn't affect you that drastically and you won't find your score tanking that much. In general, people who open many new credit accounts in a short amount of time are seen as riskier borrowers. Too many applications for credit can mean that you are taking on a lot of debt or that you are in some kind of financial trouble. So please apply for and open new credit accounts only as needed. Plus, if you recently been turned down for credit, It's unwise to apply for another credit card or loan immediately, as multiple applications over a short period of time may suggest to lenders that you are in financial difficulty. According to Experian, not opening an account for 6 months can boost your credit score by 50 points. Number 2 is going to be the credit mix. So if you just have 3 credit cards all with one lender, you're going to find yourself not doing so well here. But if you're someone who has credit cards, you have an auto loan, you have a mortgage, and you're spread out with the type of variety in lending, then you're okay. This accounts for 10% of your credit score as well. Having different kinds of accounts is favorable because it shows that you have experience managing a mix of credit. Yeah, as strange as it sounds, the system rewards you if you have credit all over the place. Well, think of it like this. The system tests if you can handle multiple lines of credit without over borrowing. Now for the third factor. This is going to be the length of history, which will be about 15% of your overall credit score. So the longer your credit history has been, the better your score is going to be, and this is actually one of the most important tips and tricks in trying to go from a 700 credit score into the 850 range. This is really when it makes a big difference because lenders want to see how long you've been having those credit cards for and how long you've been paying it off consistently. This is why it's so important to get started with your credit card journey as soon as possible. I always recommend that as soon as you turn 18, get a credit card right away. There are people who start getting credit cards when they are 25 or 30, and you don't get to build up that length of history within your accounts when you start that late. So if you're trying to have a good score, make sure you look into getting a credit card as soon as possible. Moreover, making just the minimum repayment on your credit card each month may lead lenders to assume you're struggling to clear your debts. Instead, try paying more than the minimum or the full amount each month to help clear debt faster. Now, if you have old credit accounts you're not using, don't close them down. Don't cancel your credit card after you pay it off unless you have a good reason to do so. Closing your credit card will hurt your length of credit history, so it's better to leave it open even if you're not using it anymore. Of course, if having a card tempts you to spend more, just because that Lego Millennium Falcon Collector's Edition is calling you from the shop shelf, for example, or it comes with an expensive annual fee, you might want to rethink this conventional wisdom. Number 4 is going to be total credit utilization, and that counts for 30% of your score. What this means is if I only have one credit card under my name and that has, let's say, a $10,000 limit, I want to make sure that I don't spend all $10,000 of it. Experts recommend using no more than 30% of your available credit. Personally, I want to stay under the 10% mark, even 5% if that's possible. So in the example above, if I had a card with a $10,000 limit, I would try to use only $500 to $1,000 only. Every month you use more of that credit card, you may actually see your score drop a little bit, because even though you have a high limit, they want to see that you don't choose to use all of it. Now, there are ways to get around this, of course. I mean, if a husband pulled through this ingenious design to stay silent after coming home late, I'm confident that we can find a solution to our problem as well. First of all, you can apply for a higher limit, so the percentage you are going to spend in the end will be lower. Secondly, you can apply for more credit cards, so you can spread the amount evenly on all of them. Plus, this way you can benefit your credit mix factor, so it's a win-win. For the last factor, we have payment history, and this accounts for 35% of your overall credit score. Having a good payment history is one of the most important things you could have, because if you've ever been late on a payment, or if you've ever defaulted on it, it's gonna hurt you pretty badly. Lenders are most concerned about whether or not you pay your bills on time. The best indicator of this is how you've paid your bills in the past. For example, late payments, charge-offs, debt collections, and bankruptcies all affect the payment history portion of your credit score. The better your history of paying debts, such as loan payments or credit card bills on time, the higher your credit score. Paying bills late by 30 days or more can dent your scores, and the later you pay, the greater the damage. You can set up autopay or calendar reminders so you don't miss due dates. You might also want to ask creditors to move your due dates so they better align with when you get paid. So a simple way to improve your payment history is to avoid late payments at all costs. Some tips for doing that can include creating a filing system, either paper or digital, for keeping track of your monthly bills, setting due date alerts so you know when a bill is coming up, and automating bill payments from your bank account. Another option is charging all or as many as possible of your monthly bill payments to a credit card. This strategy assumes that you'll pay the balance in full each month to avoid interest charges. Going this route could simplify bill payments and improve your credit score if it results in a history of on-time payments. To improve your credit, it helps to know what might be working in your favor or against you. So apart from all the above, it's smart to check your credit history from time to time. Pull a copy of your credit report from each of the three major national credit bureaus: Equifax, Experian, and TransUnion. You can do that for free once a year through the official annualcreditreport.com website. Then review each report to see what's helping or hurting your score. Okay guys, so I hope you found all this information useful, along with all of my friends. And if you did, please remember to subscribe to the channel and hit that like button. I hope you all have a great day and see you again next week. Bye bye.